Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice.
Bitcoin closed in the red yesterday, finishing below both the 21-day EMA and the 200-week SMA. Right now, price is testing these key levels from underneath, which means they are acting as resistance instead of support. This is an important area to watch because reclaiming these levels could shift momentum back to the bulls, while another rejection would strengthen the bearish case. Today is all about the CPI inflation report, so be prepared for increased volatility. CPI releases are often some of the biggest market-moving events of the month, and today's data could set the tone not only for Bitcoin, but for the broader financial markets. The market also remains uncertain following the news that Michael Saylor reportedly sold some Bitcoin. Whether or not this has a lasting impact, traders are still reacting to that news, and Bitcoin continues to trade within the range established on that day. Until we see a clear breakout or breakdown from that range, uncertainty is likely to remain. DVO, which is Bitcoin's volatility index, closed with a green candle yesterday. Rising implied volatility generally signals that the option market is expecting larger price swings ahead. While that isn't necessarily bullish for Bitcoin in the short term, it does suggest we should be prepared for significant movement once the CPI numbers are released. The US dollar index also closed higher yesterday and continues to hold both its key support level and the 21-day EMA. It's now on the verge of a potential breakout, and today's CPI report will likely determine whether that breakout happens. This is especially important for Bitcoin because the dollar and Bitcoin often have an inverse relationship. A stronger dollar tends to create headwinds for risk assets like Bitcoin, while a weaker dollar can provide support. ETF flows were another negative signal yesterday, with net outflows showing institutional demand softened. While a single day doesn't define the trend, it's something worth keeping an eye on, especially if outflows continue over the coming sessions. The key battleground remains around the $65,000 level. This is acting as the final major resistance for the bears and is the level bulls need to reclaim to build momentum toward higher prices. Looking at the monthly liquidation heat map, liquidity is building on both sides of the market. On the upside, there's a significant cluster of liquidity between $65,000 and $67,000. On the downside, major liquidity sits around $60,000 with another large pocket near $57,000. These liquidity zones often act like magnets for price, making them important levels to monitor. Finally, Bitcoin funding rates remain positive and are continuing to rise. Historically, when funding becomes increasingly positive, it suggests traders are becoming overly bullish and heavily positioned on the long side. From a contrarian perspective, that can increase the risk of a long squeeze, meaning the market often moves in the opposite direction of the crowded trade. And that's why I posted on X. This is the Bitcoin cycle repeat chart. As I still believe that Bitcoin moves in cycles, if we would repeat the last cycle, this is what we would get. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye.